Uh, Good evening. This is Fari Hemzi, and let me just close my uh, emails there. Good. Okay. And welcome. Today is September 20th, last day of summer. Tomorrow fall begins. It's 4:36 p.m. Eastern. And what a couple of weeks this has been. Um, Very briefly, wanted to just go over this chart as I was talking pre-open. What a day it was. I have not decided what we're going to do with the position. Uh, uh, you're new here, so if there's a background meeting, no, there's no. This is the meeting. No, no, no. You should be able to see this right now. Let's see what the audience views. Yeah, yeah. PMT. Uh, we've had a pretty good record, but the last trade got us into trouble. Not the trade we're in, the trade before that. For the time of digest, we're still open. We're still short for them, but we closed our position last Friday, which have been here. We closed about here. Oh no, about here. We closed about here, this area. Okay, obviously they really dropped in the afternoon. Now this was expiration. Usually this doesn't happen at all. Usually your activities are the front end and you get flatline. Didn't happen. This is Monday with a big head fake. This is Tuesday and this is Mr. Jerry Powell. This did the number here. Good. Now along the way, some really good numbers came in, and everybody has brought it said that what do you call it? Including one bad number, which is on permits, housing permits, that they're done. They're going to ease. No, I don't think so. As a matter of fact, what you heard is we're probably not going to do anything until maybe next year this time, other than maybe a couple of more push ups a tiny bit. The economy is stronger than we think. But one way to deal with that is just keep the rates as it is. No, Chris, there's no background meeting. No, no, but there's some. You could go into. Let me show you what you could do. If you go here, PMT preview, you can look at the previous issues and see what we do. That gives you a view back under visitor. You get 4 weeks. The last 4 weeks you can't see. Okay, but what more importantly, when you go in there, oh, hold on. Let me go here. Let's see. There we go. There are a couple of webinars here you might want to watch. This one. You don't need to log in. Okay. Timer of the decade. Here's there we go. As this and this gets updated as we are. We're in this position right now. We're still short. But here's the timer of the decade, and this is the prior rankings. And they stopped after this issue. They stopped, which was when the Biden came in, January 20th, 2021. They had told us they will not be ranking anymore. That's some problems with the data, and they run a very fancy software to keep track of 120 people. Look at our spread. I killed number twos by 50%. Think about this. Yeah. So I mean, here, obviously, this is clearly 50%. This is almost 2/3. Yeah. Here, the tail end of a year, this period, this was a period. This was a one kill. And then there was this one, 2018. Yeah, but this was, of course, huge. Both pandemic, which was a drop. That's what Captain Tico became Admiral Tico. And then, of course, nailing the bottom. And if you go to our YouTube channel, you can hear on the webinars live what we did. You can go back, of course, but we do this weekly. And we basically pinpointed, we said, most likely we should be, it should be spring equinox, March 21st. That's what that day is, the reversal. So we were very lucky. We were actually lucky. Yeah. And this was not my trade. This was Tico's trade, my dog. He recommended that we go short. And for 3 days when it went against us, it was very difficult, very difficult. Yeah, I had a lot riding on that, including some family money, and they were nuts at me on top of that. So, oh well. Now they call me Moses. So, but you know, at early on, you don't know. Just like here, you don't know this is going to happen. You do your best guess. Anyhow, we're short here. I promised in the email to you guys a couple of days ago that we're going to be short into, especially here. I wrote it this way. I said we're flat as of Friday close. We're going to ride it through. I don't want to have a position other than the bias with time and digest because it doesn't move as fast. Future options too. But let's go through the FOMC, and then on Thursday we decide what to do. Most likely, I'm going to go flat. We'll see. Let's see how the data looks like. And I will be looking at it with you right here. So, first, housekeeping. Okay, we have a couple of key items. We've been working on a Tiger Shark. We have a couple of presentations coming up. We're trying to get that out of the way. That's that. Yeah, I can't get more than that into that. 4.95 is doing good. Adding a second trade has been helpful because we turned that off during the summertime. Second trade kicks in if the first trade is a loss. It's good either to make money or mitigate the loss. Excuse me, less than. If the first trade is good, that is, we go through the BE, the first. I'm sorry, the early profit. We go to early profit. Stops drop to where BE is, so we can't lose. So that then you never see a second trade. Of course, it has to be in that that time window. Okay, so that is doing good. PMT is that. Happy indicators. We've added the two. Here we go. These charts. This is what we added. These color codes. You could see the the color gradient as the colors change of intensity. So you get a better sense of what's going on. This is today. This is a 3-minute NZ. You could see, of course, that's our coveted DMC. It's been just incredible. Founded totally by chance. By totally chance about 4 years ago. And that's part of what's called Happy Expert. Again, you want to read more about it if you're new to us, go down the product page, talk about this one, Happy Expert. Okay? After 4 years, we did a price change. 4 years. I mean, after we added a bunch of new indicators to it, including the color gradient. We've never changed prices on people. If you come in, you're locked. We don't change that. One time we did here, and that was because we were left over from the same chat room with a much, much lesser product called OTF. But that's behind us. We don't change the fee on you unless you cancel or there's an NSF from PayPal. But as long as you're with us, we definitely want to reward the loyalty. Okay. What else? One more thing. We had a webinar on with regard to this one. How to use Gamma for trading futures. Big hit already. Look at it. It's about 20. It's not even 20 hours. It's not even 24 hours. It's posted. It's a huge hit. I suggest you go take a look at it. If you follow us on Twitter, you'll see that we've begun adding a little bit of that. We can't post it constantly. We'll get into trouble, but you can see what we're doing it right there. These, you see the gamma levels and what the key levels to watch. It's not we interpret it, okay? Because what they do is very mechanical, and what's the point of reinventing the wheel? Let them, let's see, for example, you see. Let them create the code, maintain it. It costs us about $4 a day. I trade about 2 to 3 hours, $4 hours. So it's giving me, my cost is $1. So let them do that part. The key part is cha-ching, is the interpretation and how interact with what other things we're looking at. All right. If those of you in the chat today, you saw between me and Peter how we guided you guys down to those levels, level by level, and so on. So that's that. That's part of our additional. Sometimes we have to do that. You can't do everything yourself. Anyhow, we had that webinar. It was a big hit. Again, this is posted as of last night. And so how Gamma can be used for trading ES and NQ. Obviously, you can apply that to SPX SPY. You could go NDX and QQQ. So if you trade, I think these are stuff that are, between a couple of days to a couple of weeks period. Obviously, it's not ideal per se for intraday because these OIs are crucial. This open interest, they don't change instantly. Okay, there's a lot of liquidity there. There's a lot of positions there, but it gives you a kind of a multiple lines in the sand to watch for, and tries to keep you out of trouble. Hi, Calvin. How are you? Hey, Jack. How are you, sir? So if it makes sense, do spend a little bit of time. If you have any questions, send us an email. Okay. What we did, for yesterday was we actually opened the chat room. It was much easier. Just say, come into our chat room, give you the link, and then we switched the link last time. We made a new one. So that was easy. Okay. So much for housekeeping. I don't think we have anything else. If no question there, let's go to economic calendar. Okay. As you know, we had the 2-day Federal Reserve Board meeting, Open Market Committee of Federal Reserve. The press conference with Fed Chair was awesome. And as always, it went down. I think since he has been a chair only one time, I think one, maybe two, because what I remember, could be two, we closed positive. Other than that, we always close lower. Okay, now, could be at times he joined and became chair, but that's his legacy. Just usually this thing sells. And then depending how bad things are, it sells really bad into the close, or sometimes recovered slightly. Today, as you can see here on this chart, it was the worst. It was just absolutely. These are 30-minute charts. For 2 hours, it was selling, and believe me, it got me bleeding a little bit. I was getting nervous. It was becoming difficult for a period of time, and then I finally said, Perry, it's not worth fighting it. Let's get the other side. It's called opportunity cost, and so I recovered quite a bit. Overall per day, I was a slightly low, negative. So, it's opportunity cost. You can't sit there hoping and praying for it to come back. Yes, most things come back. Indices do, but over what period? With what damage? And how long you're going to be tied up in a negative return? So it's like opportunity cost. All right, let's start our chart series here. I'm sorry. No, I'm sorry. Hold on. You can tell I'm so tired. Yeah, been a long couple of weeks. Okay, jobless claims tomorrow. Philly Fed manufacturing index. I don't know about current account. Home sales, and then leading indicators. I like leading indicators. Most people don't look at it. 0.2 negative. 0.7, 0.3. It's pointing south. Yeah, that's normal. Now, I mean, this is where we are. Yeah. Well, with the rates, what do you expect? Let's look at home sales. Remember, the permits were up. The starts were down. Yeah. So, 407 mil annual rate, consensus 4.1, slightly better. And here's the range. We'll see how it comes in. And then, of course, month to month, -2, year, -16. Yeah. Here, down here, most realtors I know are on vacationing. Why? They don't want to be here, be depressed. Last year they made their money, now they're spending it. So, yeah. So, PMI flash composite on Friday. This is the fourth week. No. The first was on Friday. Sorry. First one on Friday. This is the third week. Fourth week next week, which is GDP and the durable goods. Yeah. So I would look at Philly Fed because that's Mid-Atlantic, and I would look at home sales tomorrow. Forget Friday. I mean, yeah, there's PMI composite, but these two will rule. Of course, this is set the stage. I think they'll probably do one more raise. They'll probably do nothing again, and then one more raise, and then we'll coast into in December. We'll coast into 2024, and let's see how it works out after that. But I think with a little bit the GDP should retreat. That's my personal opinion. I'm not an economist. I just read a lot, so because I don't know. So, all right, timer chart. Let's go to charts. Huge day down. Sigma level almost hit -2. Here's a -2 level. 4385 didn't get there. Almost broke 4400. So our our 4500 to 4400, which actually we had we didn't have it like that. We had it this way. Hold on. Here's our spread. We had a 440, 450 long, which is about here, 450 long, and a 440 short. We're long the 450 put, short the 440 put. Okay, that's spread. We pay for 286. You see it traded at 740. I'm sorry, 744. This is a bid ask. This is the midpoint of bid ask at the close. So I don't know where it's going to open tomorrow because it's meaningless now. When it's running in real time, you can't. Those are what those dots are. There's no history for bid ask. TradeStation does not retain it. We wrote the routine to capture it and plot it. But if you do a control R, it loses it because there's no data. The red line, yes, that's a option value spread. That's you can find difference between that line and this line. Okay, but the pluses change and they're only available real time. Doesn't matter. We're close. In the morning, it starts moving back and forth, and you could see sometimes ahead of it, sometimes behind it, based on the last trade. Again, last trade was 744. We paid 286 of a 10-point move. So if you do the math, if you take 10 minus 2.86, should be 714, even 30 cents above. Why is that? It has to do with the parity equation. You have a put spread and a call spread. It's a long session. If you come to SIBO, I'll teach it to you over there. It's a long session how that works. So we went above it, and we're very, very happy. Now we're still short with time and digest on the value on the SPX call itself. Here is the, and now I can show you the trade actually, right here. If you log into PMT and go to Pro, of course we will send a note and show that we exited all that stuff. I gotta add that in. But this was our trade. It went out on September 1st, just like this says. Yeah, the bias was at nighttime. The bias went out at nighttime to TradeStation, to Time and Digest. Time and Digest does not work intraday. It works after the close. It's based on SPX close. Why? Nobody can argue what that is. Never in history of the market, SPX did not have a value. Always has a value, so you know what that value is. No argument what that is, okay? But, and then next day, next day we issued our instructions at 11 in the morning, trade 74, and we said do the following, and these were our targets. Don't let it go over 45.75 and get out 4,400. Okay? We decided to jump out ourselves a little bit early because it was just too shaky in that expiration last Friday. But we went exactly to our numbers, 440, 4,400. Not too shabby, huh? If you look at this chart, I mean, and then this is at the time the instruction goes out. This is at the time we send the order out. This is where we were. It was trading 451. Yeah, on the spot. Just take a skin a little bit. Yeah. Trading options and futures are not for the faint at heart. You really have to stay focused. And these comes out of our Sigma channels. We don't just pick any number. This comes from what the chart's showing we are. So, but we're grateful. Still short with them. We'll see if we're going to make a position or not. I may at the end of the night tonight cover it and just say that's it. Why is that? I'm going to show. We've dropped quite a bit. So here's the setup 69. Maybe we haven't dropped enough. Yeah. Maybe we'll hold. Maybe we put another trade on. There's a possibility we put a trade 375 on, not 74. 74 is done with. We put 75 on. No bias change. Stay with the short. I think with these idiots that we have that we've hired in Washington, especially the far right, they're gonna hold up everything. And it could be a replay of 2018, the December. I don't know if you guys remember or not. It could drop down heavy. Question. You need to Okay. There's a lot of data points. That's what I'm doing right now. So, Chris, yeah. Chris, you'll get a hold of it. But you need a couple of webinars. Okay, watch the webinars there. There's a lot I go through. Look at the charts. There's something like 15 parts here. So one or two won't help. But let me go over. McKellen, no. McKellen is good, but that's old technology. Listen, I like Sherm. And I was, he mentored me, Sherm McKellen, and of course his wife, Miriam, bless her soul. She's the one who designed this thing. But these are good, but these are single dimensions. The solution, Chris, is multidimensional. You'll catch what I'm talking about shortly of how this works. But I look at some of our own indicators like Happy CI, very high speed, very fast, what's called zero lag indicator for momentum and trend combo. Remember, some indicators are good for trend, some indicators are good for momentum. This is a combo. Has zero lag because you use the limit theory. So we're crossing over CI dips on the downside. So that's point one. This is equal weighted. Okay. I'm getting more hang of it. I've probably looked at this no more than a couple of months now. Here's a symbol, EW, and E added at the end. And of course, we no longer do the breadth thrust and McClellan because it'll be the same number because it's not off the price, it's off of internals. So we'll give the same number, we just clear the space, so better see that. You see what happened there? It broke 200. Now at the end of these charts, I'll tell you what I think. Most likely what we do for the next trade. Yeah. Canaries in the coal mine. Okay. Obviously, there are two leading indicators here that we've got to watch. It's not the two tops, it's these two. It's the second chart, second panel on each chart, which is transportation and Russell. Look at what transportation is doing. It's in the channel -1, -2. If you look at our indicators, you'll learn how we do the sigma channel, what the -1, -2 means. We're sliding down. It's failed at 50 bars. You see that? Just beautiful. So I think, I think we need to stay short. So is Russell. Interest rates and Russells don't mix. Why? These guys are small companies. They don't have a good balance sheet. They don't have a lot of products. They don't have a lot of management. They're, Russell, the small caps. So they have to borrow, and they don't have a lot of equity. So a part of their operation is done with debt financing, and therefore interest rates have a big impact on them, especially when you're at 22-year high. Keep that in mind. The rate. Listen, some of the people who are trading right now, let's see, the rates we're at, they were not alive when the rates were this high. So, nothing wrong with that, but just that's the way it is. D-Trender. D-Trender is the difference between the price and 50 bar and the 200 bar. Why is it helpful? This is 50. This is 200. D-Trender. It's a way the large players come in when you have a birth cross, whatever you want to call this. I forgot there's a name for it. This is the death cross. This one, when it breaks when it breaks underneath it. When 50 breaks underneath 200, that's a death cross. So right now, we haven't dropped that on SPX yet. If we had, the selling would have accelerated. Okay, but you could see we're below the 50 bar. That's why it's negative, this differential. And then you have to normalize it. That means that you make it percentage up and down. So you can measure apples and apples. All right. So -1, -4, -5, -2. So 4 negatives so far. 1 positive, 1 positive. Okay, what are we? We're 5, 3. I'm sorry, 3, 5. 3 positive, 5 negative. So as you know, when I was getting ready up here, we're 8, 0. 8 up, 0 down. Now we're 5, 4, 3. 5 up, 3 down. So the moment it gets to 0, 8, that's time to buy, for sure. But there may be opportunities before that. But typically, if it's all up or all down, it's time to do a mean reversion. Okay, big spread. I'm sorry, VIX, not a spread. No, just VIX and Sigma channels. Okay. VIX has come up very nicely today. Very nicely. And remember, what did I say before? I think it was right here. I think we did. Yeah. When was it? The 31st? Yeah, right here. I was screaming, saying, "What are we doing down here?" You see that? What are we doing down here? This market is too high. Of course it did, and we'll come down. So VIX went up to 1 sigma, VXN same, and that's a Russell. RVX is 0 sig, the center line. Okay. All right. More of our proprietary indicators. Okay. This is not. It's not a proprietary indicator. This is just a chart. 52 weeks high. I'm sorry. 52 weeks high of S&P. 52 weeks low of S&P. This is a number of names that are making new high, new lows today. So 6 made new lows, 14 made new highs out of 500. Okay, over the whole period is 52 weeks. This is the same data, but looking at the chart description of that bar as weekly, or interval of that bar as weekly. So there's no signal here. I don't see any signal. It's very quiet. It's very low. No significant. When we were here, what do I tell you? We're going to drop. We're going to be dropping. The drop will be coming. We did. Got to here. Then pulled back up. Next drop. So, no, are we done here? I don't know. Probably not. But I think we have done quite a bit of work, given where we were at 2 sigma. No, I'm sorry, 3 and 4 sigma, and now we are at 2 sigma minus 2 and minus 3. Remember, in the index, we don't go past 2 sigma much. The currency is very low, but we do drop below 2 sigma and sometimes touch -3. Wait a second. Where's my SA? Hold on. Why is not acting? Hold on. Let's see what the SA are saying. That's the strategy automation. Why is that kicking in? There you go. I'm sorry. The strategy. Come on. Don't be shy. Huh. Again, it still didn't kick in. 1 second. Oh, I know why. Hold on. Sorry, guys. I'm tired. I have one session after this. Okay, let's agree. And then you want to put this on also. Okay. Yeah. Off. Let's just. Okay. Why is it not plotting? Huh? Okay, I've got something going on here, guys. That doesn't make sense. I have to look at it. I don't know. This is on. It should give us a buy and sell here. It's not. I'm gonna try it one more time, and then that's it. I gotta resolve it later. I don't know what I did. TM2. Yeah. What is the issue? I have no idea. I have no clue. I gotta take a look at it. But we, as in the past, you see, you have a weekly and daily timing model running. Okay. Now, Momo and SP1. These are some internals. Notice we dropped, but not huge. We're not at -3 sigma. We're still at -1. So most likely, I'm going to hold. I'm going to hold the short position. We'll probably put a new trade on for members. Yeah. We had -3.5. That's a big drop. Yeah, we have ways to go. Yeah. Yeah, around 10. -10 is a bounce area. Above 10 is also it's too bullish up here. I guess overly, kind of exuberance, irrational exuberance up here, and this is fear. So we're not there. Interesting. This is not kicking in. I have to find out why. Okay, no worries. That has worked for, I don't know, 15 years. That little model. Okay, SPX versus SQ. We dropped. All right, not much. and the signal wasn't too high. Okay, I still think this got a leg down coming in the price, but this is the skew that gives us a chance to prepare between 1 month to 3 months forward of a pending move. This is a tail risk on the downside, so it's a put area. Some of the people I've talked to, they're not guaranteeing me, but basically they're trying to say we're going to see 4,000. That's not a 10%. Okay, not saying it's impossible. I never discount those. What I always ask is, what's the catalyst? Tell me a catalyst. This is all-time high at 4,800. This is all-time high and low for SQ. 100 and 170, as you know, this is supposed to be 100 and 150. As you see, this is when it was designed for. In practice, it has shifted. The center line is no longer 125, it's 140. And the high is 170, low is 110. So we're kind of neutral here. This doesn't give us a signal. This gave us a signal. Very high at 4 sigma. It's 4 sigma that says 1 to 3 months forward, we have an event. When was this? This was June 1st. So we're still in that window. Maybe slightly behind. Now, worth noting, to 2018, exactly this happened. Okay? But the signal was in August. And the bottom was Christmas Eve, 2018. I don't forget that day. I was exhausted, but we had an incredible day, but absolutely exhausted because all of it kind of jammed into a couple of days. It was quiet, did nothing, and then all of a sudden, a couple of moves in October, then recovered, a couple of moves in November, recovered, and then whoosh, down in December. And that's when there was a government shutdown. All right. 91-day discount rate, 5, 10, 30, yield to maturities, okay? This is not a yield to maturity, you have to convert that because the duration of this position is 91 days. So 4 times this happened. You actually have to take that and raise it to a power of 4. This is a 7-year high we're looking at, okay? This goldenrod color that goes across the support and resistance levels. We made a new high yesterday and today. In a 5-year, we challenged the most recent high that we put in last month. In a 10-year, 30 is still sitting there. So here's my take on the Fed activity, and of course, not saying I agree or he agrees with me. I don't know the man. I just have a lot of respect for him. Gunlock, head of DoubleLine Capital. Basically, you could see here, and look at the timing. Today was FOMC, but look at the movements. So what the bottom line is, the bond vigilantes are cleaning up the system. The fear we've had is our interest expense. Right now, the interest expense for the national debt is over $1 trillion. So it's not an easy issue. Yes, absolutely, Dennis. You're absolutely right. Yeah, this could be a government shutdown. Yeah, I don't see them coming to terms with each other. I don't take sides. Remember, my whole idea is that I don't want to take sides. I'm a non-voting observer because it will color my judgment. Because to me, getting this right is more important than what these rascals argue back and forth in Washington. And that's the last time. SQ gave us 2 good signals. One was in this August, like 20th of 2018, and then the other one was late December of 2019, which led to this drop. Okay, so before here we had a signal late in 2019. This is 2020, and we dropped. Remember, this is weekly. It's easy to remember. And then prior to that was this other drop, which was, I believe that. Yeah, that's it. Yeah, 2018. Yeah, this was and the signal for this came in August, so that took 4 months. Generally speaking, we look at a 90-day window, but there's no hard and fast rules. It's just it's a market. Market goes up, market goes down. There's no straight line. Our job isn't to pick tops and bottoms. Our job is to tread with the water, get the trade direction right. So, but that's how that thing lined up. Anyhow, my point is the bond vigilantes are doing the job of the Fed. The Fed is behind the curve. There's no question. But that's why the vigilantes come in and do this. And you can see what's doing here. And so we got to address this. It's going to be a major, major problem. Why? Because we're going to crowd out other areas. We're going to crowd out defense. We're going to crowd out capital formation. We're going to crowd out healthcare. Anything that government has a hand in it is being chewed on by interest expense. And I think forget tax cuts. No more tax cuts. Somebody says tax cuts, firing squad first, court martial next day. We just can't do it anymore. And plus, this trickle down stuff never worked if you really look at it. And also, printing money doesn't work either. Look, all this money they printed in 2020, look what happened to interest rates. So we've got to come up with new ways. Old ways are not working. I'm sorry, they're not working. So don't give me empirical data. It does not work. Otherwise, we won't be a mess we're in. So I don't have a solution, by the way. I'm not saying I do. Oh, hold on, Murray. Hold on. We may be flipping here, guys. Yeah, this is close enough. This is close enough. Yeah. Now this is SP2, one of my oldest indicators. No need to touch it. Always works really well. And we're nearing 25. You sell at 75, you buy at 25 or thereabouts. Now, this is when it gets flushed. This really go down. It got flushed here too. So we'll see. We'll see. I got to think about it, but most likely, I mean, probably one more day and then we go long, or at least close, book it, close, because this was 1% for us with on S&P. Take the 1% and run. Why not? So we'll see. Now, look what happened here today. I mean, this just during that last 2-3 hours, I kept on checking here. This is a 3 months VIX spread. Now we rolled. We rolled last Friday. Here's how it goes. As you know, it expired today. Last trade was yesterday for the September contract. So we rolled to October, long October, short January. That's how you create the spread. And then we put a sigma channel, but a modified sigma channel. The sigma channel is to get one value, not a spread. Take the spread in, and then plot that, and you can measure the movement against itself. And look what happened: excessive, way up, way up. Never got to zero, but I'm willing to say, let's say past -1. Remember, as we go up, numbers getting smaller. Once we get to about -1, that's the low. So we got a little bit more work to do, slightly more work to do here, then we're done. As you know, the record of it, SP2 is remarkable. So you just can't get head faked with it. You got to really look at it in its pure way. We did have our rendezvous. Was it Michael Becker here that was asking for a rendezvous? Was it? I think Mike. Was it you? Yeah. Now we have it now. We just have it now. Except a little bit lower than we expected. Why? That was a lot of weakness. This was a lot of weakness. Yeah. Friday was bad. We came back up a little bit on Monday. Neutral yesterday, and then they killed it. Early this morning, I said, I better write to market to time and say I'm out. Then I said, it doesn't matter. They won't give you a close. Yes, they close. They're going to give you today's close. You might as well watch it and then decide. You might as well see the result of today and decide. So, yeah, the rules are past midnight, you cannot change your bias. So you can't take advantage of the differential in the futures. Okay. As you could see, the low was 440.138. It's massive. Yeah, and of course we jumped up here on the VIX. Okay, this is the stock RSI rendezvous point, kind of 54ish. I was hoping for more dramatic move, that is, get up here rendezvous up here and then drop like this, like this. I was looking for that. Okay, rendezvous up here and then drop. You could see it was two massive days. Didn't happen here where we are. As a matter of fact, first line is already down here. The faster stock cars, I remember there are three of them. The fastest one is already near zero. So yeah, yeah. I'll have to decide. We'll see. Listen, markets are open every day at 8:30 East Central, right? Okay. Here's another one. We're only down 62%. I mean, I don't get this. I don't know what these guys are smoking. I don't. I mean, we drop like this and high and low. I mean, at up to down volume ratio according by Larry's formula, it's only 62%. Worst case was 79 for Russell, and Russell dropped like this. So, too many cross currents. Okay, now last time, this is the model. This is the model. See, it should show me these on the our model. I gotta find out why it's not kicking in. Hold on 1 second. Remember, we're running now on the. This is the quad. Hold on, performance. Yeah, we're running a quad. 16 cores. Yeah. I wonder if that did anything to it. We have to recompile it. We'll see because it's called model. This every time you see a SA, okay, that means it's running a model. Green is running, gray is on standby. So something is off there. If I get this on standby, let me get. I'm sorry, I'm just curious about this. This is on. Yes. Generate. Yeah. Because even though it's not live right now, it should show the past. I don't get this. Because we went. Oh, oh. Is this? I think it's a setting issue. Yeah. I think it's a setting issue. Okay, I've got to go in there and take a look why this is happening. I will. I will. I know. Hold on. Take that off. Yeah. Yeah. It's. I'll find out. Obviously, this is missing something. I usually look at long or long. Is it both long, both short, or is it mixed? Okay. That's a swing. This is a chart I sent you guys. Yeah. You saw the chart that went out. Here's a chart today. Okay. And we took 440 out. This was a good support there. It got close. I didn't get out. I'm sorry, I'd already gotten out. I was gotten out on Friday. This is the weekly level. Yeah, it's an hourly bar on a weekly support and resistance. We got out here on expiration. Look what it did. So, oh wow. Is there anything else there? No. That's Tiger Shark. Okay, one more chart, and then I'm more than happy to take some questions. Okay, this is the last chart. Why is it so big? Hold on. Oh, hold on. Okay, there you go. Let's go to 5 years. This is the number of S&P SPX components. Okay, that as a percentage. So the percent of stocks above the 200-day moving average. We're at that level. Son of a gun. He doesn't give us a clue. We're at that level between 55 to 45. We're sitting at 50. Very neutral, no signal. With that said, I'm done with the charts. Any questions I may answer? I can answer for you guys. And Chris, this learning process is a process. It takes time. Do not worry about it. You're gonna get it. Look at a few of the webinars. Okay, send me a couple of questions if you have them. I'll be more than happy to answer them for you. Hi Jay, how are you? Okay, but it's a journey. Yeah, it's a little journey. Yeah, it's not, and we do these every week. So there's plenty of cases, plenty of what ifs, plenty of don't do this kind of stuff because of the other sentiment, other news. Uh, I'm a financial engineer by training, but I spend most of my time in the aerospace and then some in electronics, computer industry, but mainly defense business, military industrial complex. And then they sent me to MBA school, and it turned out to be a #2 derivative school in the country, options and futures, and that was it. Turning my resignation, I've been on my own since then. So NDX looked like a head and shoulder top. Well, let's take a look. Head and shoulder top. Yeah, you could see that. Yes, yes, I could see that. Sure. Huh? Yeah. Also we have seasonality for September. That you sell Rosh Hashanah and buy Yom Kippur. So we have a couple of days to go. I may just buy Monday night. We'll see. I may buy Friday night and go long. I think I want to get another couple of days in there. The more I think about it, and here's the reason. And you don't want to get too complex. You become a multivariable, multi-factor model. You get into trouble easily. Here's I'm trying to make it very simple. Boom, boom. I need this to drop a little bit further. This is almost there. First leg is in, and that's what's called TD. This was done for Time and Digest. If you look at it this way, you really see a number of things in place. I will go and fix this. Worst case, I'll have an engineer from TradeStation come in to see why they're not kicking in. It's a setting probably. But point is, these are lesser extent impactful. Also, this is telling me we have more move down. Canaries in the coal mine. That's what we call it, canaries. We want to look at the process we're in. We're not basing. Maybe the basing is down here, and that's for transportation. SPX doesn't go up without transportation. Neither does NASDAQ. This is not NASDAQ, that's utility. Neither does NDX. NDX does not go up without Russell. So pressure on both of them. So we're probably going to be in this mode a day or two more. It could be at the margin. We may drop a little bit, but chance of the flipping back is high. You really think about it, it's the odds we're looking at. Is it, we do 70%, 80% chance with Fed, it's going to be a tough day because so far, as I said, since he's been a chairman, only one that I know of, maybe two, we closed up positive, but we're always sold. But today was a big one. Today was a big sale. It's going to show you at the end of the day. So odds are, as more pushing south comes in, the less chance of moving further south, right? And there's a more chance of flipping up. So in a day or two, we'll know. I have to make a decision. But of course, you'll see. We write it out. We'll send it to members first. A couple of days later, we'll talk about it on the Twitter and so forth, including, and then like a week later, we show the trade. Why? Because we got to preserve it for those who are members. Membership is cheap. It's about $100 a month. It's nothing. Less than a dinner. I'm sorry. Test 200 day. Yeah. For which asset, sir? Michael, which one? You talk about, are we doing SPX? Oh, I don't know. That's far. Yeah, that's far. Remember, it's cap rated. Yeah, both of these are equal weighted. That's different. But the cap weighted, that's a huge drop. Yeah. But I would say, I would watch 3 sigma negative. So 43. What's this one? 43, 47. Let's say 43.50. So if you think about it, that's 250 points, right? The low was 4,400 approximately. So that's 250 points. So most of the move is done. We squeezed it. Okay, we squeezed it. It's doing better than that, Gary. Here's the question: has Admiral Tico started buying dog food at Costco? He would never put his foot in Costco. Okay. Answer 1. Answer 2. Was he still paying market price at Morton's? No, he doesn't do that. He goes to seat to table and orders a tomahawk. We got 2 in the freezer waiting for him. He has a very discerning taste, so he's very Very finicky. Yeah. So no. Yeah. Tomahawks. Yeah. That last time he was pointing with his nose, Daddy, I want this. I told him, I said, this is 3 pounds. You're like 9.5 pounds. It's one third of your weight. You can't just consume that. So anyhow, but one of these days I gotta cook it for him. But no, he will not. You will not see him at Costco. Yeah. First of all, noise because his I'm sorry, because his Chihuahua noise and he's got big ears. Noise is a big issue. But anyhow, any other questions for me? You gotta realize something. There's a little delay, right? All of these charts have delay. First of all, it's history. You gotta trade the future, not now, not the future contract, but you know, the further out. What is not known you're gonna be trading, right? You place your trade. If it gets filled, then it's your trade. But you know what's gonna happen then. One good approximation is DMZ. You could see a bias on DMZ. We're above green, we're rising. We're below red, we're dropping. This was not planned. We know he's going to have some trouble. It could have, and we had gapped up this morning. I talked about this is getting juice. Maybe it could have just dropped to this line. This was not planned. So now we've inverted it. There's a DMZ there is negative. If I bring that's an SPX. Then we talk about it this way. Excuse me. Okay, now let's put SPY here. Okay, and then let's go to daily. There we go. Or better yet, let's just go to hourly. We'll go to hourly time frame. There we go. There we go. Just give me a simple. Okay. You could see, sometimes you don't have solutions. It's rallying up, and look what happens. It gaps down like that into. I think is that Friday? Yeah, that was Friday. Yeah, it gapped down and it sold off, came back up. Hold on. Let me open this up a little bit. Okay, you could see it gapped up. I'm sorry, gapped down on Friday. Finished. This was Monday. This is Tuesday. Smart gap up here, and look how they closed it. So the sheep shall be slaughtered. This was that play. You know Fed is coming. You know Fed is going to be negative, but nobody knew it was going to be this bad. Of course, comment of nobody knew the comments they're going to give or what the communique is going to be and what comments he answers in in that hour of or an hour 15 minutes. No, it's 45 minutes. The 45 minutes of his press conference. The problem with that is that also each question could be treated as a trade. We're using futures, so there are a lot of volatility, but not today. It was pretty much straight down. Yes, we pulled up a little bit, only to start it off again. So that's where we are now. It hit 4,400. I'm sorry. What is more important to you, volume or time? Good question. I was mentored for a while by John Bollinger. He was big on volume indicators. Um, Probably that had some impact on me when I worked on OTF and created that, which is now is our is our mainstay. We run that when we're not running Orb. So Orb runs 2 hours a day, 2.5 hours a day, 3 days a week. So 7.5 hours. Other 32 hours more, 32 plus more hours is running OTF, which is volume based. More importantly, block based. Okay, I would say block. Okay, not just volume, but block. I want to look at size of the orders coming in. So you have to parse the feed. Okay, it's a little trickier on the code. Uh, but as far as time, um, I'm not good at time cycles. I'm probably better at price. Time cycles, there are a couple of guys I know, they're bad at it. Occasionally they send me their stuff. The problem we have is that they got it. I think there's even a cycle tool here. Let me see. The studies. Is it visual? I forget where it is, but there's a visual stuff there that no, show active hide all. No, I forgot. There's a toolbar. No. Platform. No. Shortcut messages. No. There's one of these toolbars here, okay, that gives you a lot of tools that they have. And they do these circles, half circles, okay? That the problem with that is that when you get always the last one is going to be today. That's because that's so comfortable. That's what they send the chart out. And they look at how many of those matched. There's no perfect match. There never will be. Can't be. It can't be that simple. So the circles, the half circles, are equal distance, equal size, but prices aren't. So you get, I don't know, 6 out of 10. You say it's a good match. Okay. But doesn't mean the next half a circle is going to find it well. Price is a little bit different. Price is more of a intensity. And so I use that. But in terms of volume, I want to see block sizes because that's what moves the market. Ones and twosies don't move the market. It's the block sizes. Same thing here with options. I mean, what's that? What is it the one that Nigerians use? Heat seeker. I wrote the first code for them. Yeah. As a test, as a showing them how it can work. The problem is that the idea was great. Like the idea was great, but they didn't have the budget. You can't have a what do you call it? Dom Perignon on a Michelob budget. Doesn't work. To do that right, I'm not sure what they did. I'm not saying they did right or wrong because I wasn't involved with them any longer. This is back in 2003, 2004. To do it right, you would need something like 100 neural nets running. Yeah, 100 neural nets running. Yeah. Let's say I've given 100 best names, active names, but you need to run at least one per name to have a predictive power. Predictive power is when you give a signal ahead of event, not concurrent, not after, because they're not actionable. They have to be in advance of, and that's they never had that kind of budget. But the concept was that look at we could detect block trades, but those it doesn't say on the options. It doesn't say it's going to continue. It doesn't say which way it's going to go. Why? Because when you see it, there's already history. What you want to do is do a predictive model where, like AI, come and say if this and this and this happen, the other one should happen, and have enough classifications of those to run it to a neural net, which is like original AI stuff, and then that gives you a feedback that probability-wise, what's the chance of that event happen? And back then, it could be also the budget we had, the CPUs we had, so forth. A lot has changed. Technology has changed dramatically. Listen, we're at 32-bit here. We should be by a year end at 64-bit. And as you know, from update 68, which is 70 here, we already moved to multi-core processing, which is this performance. By the way, it comes to you this way, or when you update, it comes that way. But you have to do it this, hit OK, and then reboot the trade session. So a lot has been changing. I'm thinking of some stuff myself where I could do a little bit better using AI, but who's got the time? Yeah, one of these days. So it's hard to code, run a chat room, and run a hedge fund. It's just a lot of work. Yeah. Hey, CL Mike, how are you? Okay, guys. Any other questions for me? Oh, webinars are always found here. The other one, we did not have a chance to put it up. The what do you call it again? The gamma. But look, in one day, look how many reads it's had. So, but for our size, that's a pretty good read for in 24 hours. But we usually post any upcoming here. This is today's webinar. With this thing, you register once because it's got a reminder. Okay, we just change the date to remind you. If I'm going to miss a date, this will change, and we'll take that out. We'll cancel it, and you get a notice saying like next Wednesday's canceled. Okay, but it's hard. I mean, this year I canceled once. I was just too sick. But next one will be 27th. which is the last one for September. By the way, tomorrow is first day of the fall. Okay. Anyhow, any questions for me? I got 6 o'clock coming up. Oh, thank you, Dennis. Appreciate that. You're quite welcome, Beck, Michael. Good question, as always. All right, see you guys next week. Okay. I'm going to post-process this and then get it to YouTube and give you guys a link on Twitter so that we're good to go. Then I can jump on my 6 o'clock appointment. Thank you.